Hello, Jiten bhai. Good evening. Can you hear
Yes,
me?
good evening. How are you?
All good, Jiten bhai. All good.
Good.
Thank you so much for joining in. I was just talking through about the market action today. Fourth successive day of gains for the Nifty. I know there's a sea of global uncertainty around with what's happening, rupee, crude, US inflation, or rather, I should say, recession fear. What, according to you, is the market outlook? What is your short-term outlook for the Indian markets?
Yeah, so again, short term, I don't know, I can't hazard a guess for short term, but I think it's, basically a relief rally because of what is happening in the UK. I think that is the primary driver, but I think short term challenges we still believe that are there.
Jiten bhai, could valuations play a spoil sport? Because while there's so much talk about India being an outperformer vis-a-vis most other global economies, at the same time, valuations are at a significant premium. And should things start to improve globally elsewhere, would valuations be a sticking point?
Yeah, see, again, I think valuations are a bit rich, but I think we will sustain these valuations, is what I think. I think earnings will come, and I think we will sustain these valuations. I don't see any big correction happening, uh,
Mhm.
is what I think. And I think we can talk about that. I can talk a bit more on that.
Well, so yeah, why don't we talk about earnings then? Obviously, the earnings season is underway as well. What is it that you are factoring in?
Yeah, I think earnings should be good for many companies. Of course, there will be certain companies which I believe are certain sectors where we believe there will be some challenges. But overall, I think earnings should be good, especially where we are focused. We believe apart from maybe cement, which obviously is a slightly longer term call for us. Most of the other sectors should do well.
All right. Jiten bhai, while I know inflation is not as bad in India as in the case for most Western countries, does it still concern you the fact that the inflation print has been above the RBI's target limit for the past 8 consecutive months? And how do you see the rate hike trajectory going forward?
So maybe one more rate hike is what I see. Maybe another 50 basis points uh, is what I see. I think inflation will start cooling off, but then we also have to assess, about all these unseasonal rains which are happening,
Mhm.
and what is the damage to the crops and all that. So that is something which we will get more info on as we go along. So that is a risk to you know basically inflation coming down. Otherwise, I believe that inflation should trend down.
How soon do you expect the trend to reverse or at least moderate?
I think this should be the last quarter where we think inflation will be high, uh, or I think from next quarter we should see inflation coming down.
All right. Jiten bhai, let's talk about individual sectors, and we can't not talk about financials. It's a vast sector. You have banks, both public and private sector, various NBFCs and insurance. Where is it that you see the most value?
So I think it is across sectors which we should look at. We should look at banks. We should look at uh, uh, from private sector as well as public sector bank. We are positioned towards both of them. We can also look at certain NBFCs, certain housing finance companies. The whole financial basically sector does look good to us. from credit offtake perspective. Uh, After a long time, I think there is visible credit growth happening, and also a lot of things have happened in the sector. Uh, the NPA cycle is behind us, so I think we should be good in this sector for the next 2 3 years. Post that, obviously, we'll come to know how much stress is there because uh, uh, now the lending which happens now, I think if there is a stress or something, we'll see after 2 3 years. So till then, I think there should be good credit growth, improving ratios for the banks and so on.
Okay. Uh, does it bother you the way that markets have completely ignored the public sector banks and the kind of outperformance we've seen in the PSU banks versus the private ones? Would you, by any chance, have increased your allocation or exposure to PSU banks?
Yeah, in fact, we have very decent allocation to public sector banks in our strategies. Uh, we
Does
believe
it
that.
go beyond the SBI, or are there more names?
So again, names we will not be able to give, but then we look at stronger banks is what I would say. That's all I can say right now. Uh, it will be unfair for me to name the stocks.
Understood.
But yes, we will look at only quality PSU banks. Maybe one outlier we might have just to get that alpha. But there also, if we see some things happening where we believe that things are improving drastically. So we have one name which is there, which you can say mid tier, but rapidly improving fundamentals and financials. But
All
otherwise,
right.
yes, we are looking at only the top ones. Yeah.
All right. And do you, by any chance, have exposure, or do you like any of these new age fintech companies, like perhaps a Paytm or a Policy Bazaar? Does that, warrant your attention?
No, we won't have any of the new fintechs yet in the portfolio. I mean, we want to see their business models settle. Policy Bazaar, the business model is there obviously, but then we do need to see path to profitability. Uh, Maybe at certain point in time in the future, if they have corrected good, I think valuations were in favor. We have been quite vocal about staying away from all these new age companies, fintechs, and so on, and we continue to uh, basically still not look at that space yet. Especially with opportunities available where you have a certain sense of uh, uh, certainty amongst the
Hmm.
names which are there. We would rather look at that. See, we have to balance risk and reward, and of course this can be highly rewarding, but I think the risk is also very high. So we have to balance that. We have to look. Our whole idea is to generate returns, keeping risk in mind.
And from the housing and from the NBFC space, is it majority the housing finance names, or do you also like an auto financier or a gold loan financier?
No, gold we are not looking at. I mean, uh,
Hmm.
you see what has happened in the gold finance in the last 2 years. I mean, uh, banks have gone
With
into
banks
that,
being
and
given the
yeah,
permission.
exactly. Yeah, sorry.
With banks being given the permission, so
Exactly.
that
So you see the book which has been the gold loan book of the one of the largest PSU banks. You see that number; it is staggering, and so on. So and I think the gold finance companies cannot compete. Cost of capital for them is quite high compared to these banks. So I think they will struggle for some time.
all right. Jitin bhai, a lot of the experts that I particularly speak to are extremely bullish on the capex and domestic manufacturing theme. I'm sure you guys, even at Aurum Capital, are. while not discussing individual names, if you could share some pointers as to how one can go about picking the winners from the space, because unlike most of the other consumer-facing sectors where you're more aware of the brands or the products and use them, over here there is a certain amount of research that you would need to find out how do you go about picking the winners from the space.
Yeah, so let's come to this question in a while, but I want to
Sure.
basically build a base towards it. So
Hmm.
basically, this is more of a market view from a long-term perspective. We have to understand. See, as you mentioned earlier, yes, we optically we do look expensive and all that. So I want to basically delve into the reasons why this is happening.
Okay.
What has happened is over the last many years, tremendous reforms have happened. Okay, what the government has been able to do with Aadhaar, UPI, Jan Dhan, and direct benefit transfer and so on. These I think are game changing. Now, what has so basically this whole digitization uh, and bringing basically the black economy into white sort of the transition which is happening now, that is leading to a lot of tax buoyancy, including GST buoyancy and all. So there is lot more compliance which is happening, that we since we do a lot of scuttlebutt, we can see that happening over the trading community, the SMEs and so on. So a lot of people are actually now in that particular net, and all that is happened because of all these initiatives which have happened. So this is a very very important thing to consider for us now. When uh, when the government collects good taxes, it does spend, right? So it spends on infra, uh, and there is a multiplier effect. It spends on infra, it spends on benefit schemes, and so on. So and then that leads more to consumption and all that. So basically, it is a kind of multiplier effect which happens. So that is
Hmm.
something which we should all keep in mind, that this silent change has happened over the last few years. So this is a very important fact to understand the whole India story. Apart from that, I think what the government has been able to do with defense, for example, such a large sector, large, where we used to have, we still have obviously, but where we used to have a large import bill. Uh, so the government is trying to cut that. A lot of localization is happening, and there are chances of basically that India might be become a export defense export is something which we can see happen in the future. So that is another big change which I think has happened. Apart from that, all these PLI schemes and the focus on certain targeted sectors where we can bring in manufacturing and so on. So for what is happening in electronics, chemicals, engineering, capital goods,
Hmm.
I think all these steps will help in making India uh, 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 from more of a service-oriented economy to a manufacturing economy. The transition will happen over a period. Uh, and the reason behind that is there are a lot of problems uh, external, in the sense that China is having its own sets of problem.
Hmm.
Europe, we all know, is going to have is having big problem. Now there is a chance that India benefits from China plus one as well as Europe plus one. So I think what will happen is, over a period there will be a lot of focus in manufacturing. Now that is something which I think as a country we should capture, and I believe that there are a lot of steps towards that. So how much we will be able to gather from that particular pie is
Hmm.
something which we will see over time, but I think we will be able to do something there. There will be obviously competitors, but very few company would have such a big large skilled and labor kind of demographics, young population and so on. So India should be a key beneficiary towards this change which is happening. Uh, and basically the whole demographics of India being such a young country,
Hmm.
I think we are set for a consumption boom. Another factor to look at is we are at per capita income of $2,200, right? Now that if you see history for other countries and all that, when it goes past $2,500, there is a consumption boom which happens. So that is also going to happen. Uh, Also, we have to look at what are the uh, there are problems in the world. We all know that, right? Europe is in trouble. US, there is talk of recession. There is a lot of upheaval in China and so on. uh, India is the only country which is slated to grow, is the only large economy which will grow at 6.5, 7% this year, and maybe another 7% next year. That visibility, I think, is there only amongst India, among the larger economies. So that is why I believe that though FI has been selling and all, of course there is a reason for that because of the US yields and all that. But at certain point in time, I think the US Fed will have to stop this tightening and maybe pause uh, or start a reduction cycle. I think much before that FIs will
Hmm.
start pouring money into India. I think it's a market which FIs cannot ignore. Uh, for long time. So yes, they are sellers now, but I think they will return with a vengeance. And the good thing is that uh, about you know if you do all the math, about 4 lakh crore of domestic money gets into equities every year, uh, because of SIP, because of ULIPs, because of EPFO, because of you know uh, uh, balance funds and equity inflows into mutual fund and so on.
Hmm.
So that is a significant amount of money, and that is what has cushioned us uh, from the exit. At the start of the year, we had $35 billion of FISL, but we were able to absorb it quite well, and with almost no damage, right? Uh, and I think even the selling now is being absorbed quite well. So these are some strong factors which basically gives credence to the long term growth story of India. Now, I classically call this as a short term headwind, long term tailwind kind of story.
Hmm.
Short term
Okay.
headwind we are all aware of, right? That
Right.
this war, this problems in Europe, this problem in US, and all that. So these are all short term headwinds. Yes, there will be a lot of companies and a lot of sectors which will be affected by this. So the idea is to not be in those sectors. If you want to look at from a short or a medium term, and look at sectors which are domestically focused. As we talked about, financial, cement, infra, real estate, telecom. I think these are some of the sectors which are completely domestically focused. And if our economy continues to grow, this will do well. Uh, so, but at the same time, all these affected sectors also over a period will give you opportunity, because if the correction happens and they come at a good valuation, then one can look at a contra bet in something, let's say IT, or for example, because yes, long term they will continue to grow moderately, and if valuations are in favor, then one must look at. We have been basically away from this sector primarily because
Hmm.
the valuations were very high, and now they are correcting. I think they need to correct some more, and then we might have an opportunity to deploy in those sectors. But right away, I think we can stay away from those sectors. So this is a brief overview I have given you about what I think and the way we are positioned. So now you can go ahead and ask me the questions.
Yeah, that was actually a very elaborate answer, and we even ventured into IT services for a brief moment there. But
Yes.
so coming back to your answer, and there were two sectors which specifically stood out to me. You mentioned about defense, you mentioned about capital goods. Again, how is it that someone goes and picks the winners from these space? Because again, this is a vast space. There are many companies who historically haven't done that well. How does one go about picking them?
So again, that obviously you need to have an understanding of the sector to be able to pick companies. So again, we made a contra bet into capital goods last year, and we are happy to say that our stocks which we are holding are already 3x and 4x in this particular sector. So what we looked at is companies which uh, so where we took a contra call in capital goods. So that time, I think the story was not as good. We could see some green shoots on the ground. So that is what prompted us to look at it. And obviously, we follow cycles and all that. So 7, 8 year of down cycle, and it had to turn it. So we could see that, I think there.
So Jitin bhai, if I
Mm,
can, sorry to interrupt you, but if I
sure.
can ask you 2 or 3 pointers that you look for in a company from either of these spaces before you go ahead and buy them. Is it order book? Is it valuations? What is it that particularly catches your eye, or you try and look for the most?
Sure. So valuations is very, very important for us. I mean, that is a lot of
Sure.
people say that we look at valuations in the last. We
Hmm.
probably are not in that band of mind. We look at valuations before we delve deep into it. We should, look at what are the valuations. I mean, to to get the historic growth rates or previous cycle growth rates or is not very difficult, right? With from
Right.
there's so much data available. So now, if for example, even in a good cycle, a company was growing at 15, 20%, and if it's available at 50, 60 times, then we will not want to spend too much time on it. To be honest, okay. Because so something of that sort. We looked at companies which had low debt, obviously, or no debt, or actually cash. So one of our companies, in fact, both the companies which we had in capital goods, both of them had cash in the balance sheet despite these 7, 8 years of down cycle and tough time. And what prompted us to look at these companies were that so I'll talk about one company first. So it's a transformer player. What we looked at is that this guy have always been profitable even in the down cycle. They never made a loss. They always paid dividend, uh, and valuations were very favorable. And if you could judge that, okay, if there is a significant growth in the order book, you could guess that these companies look very cheap because uh, when you are doing a contra investment, PE might not be the right way to look at it. What you have to look at is how much revenue they can do in the future and what could be the margins and so on. So these
Okay.
companies look very cheap to us. As I said, they had cash. The second company uh, we entered into over the years. See, over these down years, they got empaneled with lot of EPC guys abroad and so on. So and that process takes 3 years, 5 years, and so on. So during all this period, this company used this down period to get empaneled with this, and uh, you could see that capex happening and all that, and
Hmm.
inquiries improving. So again, a lot of it comes from the scuttlebutt and on ground research. So we could see that inquiries were happening, and people were uh, people companies who didn't have as much as of inquiries or starting to have orders and so on. So that kind of scenario was building, uh, and also the fact that the cycle has been down for such a long time, companies were not in capex mode and so on. And another factor which was very important is that capacity utilization in these companies. So what has happened is,
Hmm.
excuse me, sorry. Hello.
Go ahead.
Yeah. So what has happened is in this lot of this, and this happened across India, in that everybody focused on their balance sheet. I think currently probably we have the lowest debt ratios and one of the highest capacity utilization. This is a situation which has happened now. post 1 year of this thing, that time we could see some of the green shoots in these two parameters also, that capacity utilization was quite high and balance sheets were improving despite despite all the disruptions of COVID and so on. So these are some of the factors which basically where we narrowed down on a few
Mm.
companies and basically recommended these companies.
Understood. Got it. Jiten bhai, there are also tons of changes that we are seeing in the media and entertainment space. Again, not very vividly tracked, but do you like any of the stocks from this space, or would you wait for some more changes or tailwinds before you find them attractive?
So again, media is a classic sector which always flatters to deceive. But at the same time, you see what has happened with a lot of companies over the years.
Mm.
You see so much of consumption happening and all that, but then winners have been almost nil, right? Uh, the thing is,
Right.
yes, at certain point in time, it might look attractive. In fact, we are evaluating right now, to be honest. We don't have anything now, but we are evaluating some ideas there. But then I have to say that it's a sector which is difficult, and I think the returns are just quite not there yet in this sector. But at the same time, some of the companies do really look attractive. Yes.
Yeah, and that was actually one of the main reasons why I asked you, because of the kind of returns that we've seen, or the kind of underperformance that we've seen that perhaps could reverse from here on. But another sector which is not doing that well is sugar, and we know it has become more of an energy play than commodity. The whole ethanol blending story, it is still very much intact. Yet we have seen a healthy enough correction across the board. Do you think these are good levels to enter into any of them?
Yes, I believe so. I think, but then I don't think it should be. We should expect very big return, because what is happening is sugar production will also be very high. So
Hmm.
we do have to understand that still a significant amount of their revenue still come from sugar, uh, and it was a very high. It was a highly cyclical sector. The cyclicality has reduced. There is no doubt about that. But there is still some element of cyclicality in the business, and the only reason one would not go all out to buy, because I think sugar production for next year is going to be very high for 22-23. It's 36.5 million tons. We will also be dependent. Will also be dependent on. Uh, can you hear me? Yeah.
Yes,
We
yes,
will
I can.
also be dependent on, if government allows exports, or all those things are there. International prices, what happens with them? But yes, prima facie it does look attractive. Quite a few companies there look attractive, and it's gone through a consolidation sort of for quite some time. So again, we are evaluating a few ideas in that sector. Currently, we have nothing. Yeah.
All right. Interesting, and a lot, about the sector's future lies in the hands of the government. So that is just one small caveat. It's not a free market, so to say, for the sugar
I
sector.
think there is probably sugar is the most politicized commodity, because even if you look at the energy or the ethanol play, that is also completely dependent on the
Hmm.
government, right? So yes,
Yeah.
yes.
On a lighter note, are there any state elections shortly to
Yeah.
be careful of?
So I think that is not the case, but yes, general elections are there in 2024.
Hmm.
So yeah.
Yeah. So do keep that in mind. But moving forward, Jitin, and commentary from a lot of these IT companies post their Q2 results has been better. We've seen a few of these companies, including Infosys. I mentioned about L&T Technology before you joined, that they've upped the lower end of their revenue growth guidance. Margins, they expect, most of these companies expect them to remain steady at what levels they are currently. Do you think it is worth bottom fishing in any of these names?
Yeah, after some more correction is what I would say. See, the thing is,
Mhm.
for me to, for a value investor like me, I
Hmm.
even if there is certain longevity in earnings and all that, Uh, if a company is growing at, let's say, 15%, okay, and
Hmm.
if I have to pay 40 times, I think my risk reward is not in favorable. So I would rather, look at paying maybe around 20 times for max 20 times for these companies. Because where, the chance of this 15% growth going to 12% is higher than 15% going to 20% for some of these very large companies. So you have to understand that also, as the base grows, the growth will slow down, and it has happened with these companies. So even in this all
Hmm.
these good times of digitization and all that, if the companies are going to grow at only 15%, uh, I mean, I believe there is no sense in paying 40 times, which Street was paying just a couple of quarters back, and so we do not subscribe to these kind of investment because of our value bet, and you always have other opportunities, right? So why would you uh, bet where you are uncomfortable? So we stayed away. If it comes to our valuations, we will invest. Otherwise, we will look somewhere else.
Oh, absolutely. And we've seen, uh, you know, crazy battering in these names. Tata Elxsi being one of the prime victims this week, where we saw a sharp correction, down 14% in just these 3 days. Of course, it's down quite a bit from its all-time high of about 11,000 or so. Not exactly 11,000, but around that mark. So yeah, clearly valuation comfort still needs to be there. If something is worth 10 and is quoting at 12 after correcting from 15, is still not something that Jitain would go and buy. He'll wait for it to come down further.
Absolutely.
But Jitain, I know about your investing style. I know you're a bottoms up person, stock first, and for anyone who wants to understand the importance of stock picking, just look at the auto sector. So many contradicting stories. Hero and Bajaj have been underperformers in the two-wheeler space. Meanwhile, TVS and Eicher have done outstandingly well. On the four-wheeler side, Tata Motors is down big. Meanwhile, M&M continues to do well. Uh, do you have a view on the auto space and even including the broader auto ancillary space? How do you play this team?
So exactly. So the thing is that we believe that auto sector will do well for some time. We are and we will divide it into three first. CVs, four wheelers, and two wheelers. Okay, and there is tractors. Tractors, we believe that it will be okay again. But let's talk about these three. I think CVs will do well.
I can see Vinkesh sir join. He's the chairman of FADA, which is the retail body for auto sales in India. And what a perfect timing to join. We were just discussing about the auto sector. Sorry to interrupt you, Jitin. Go
Sure,
ahead.
sure, sure. So it's
Continue.
good to have Vinkesh join us, and
Absolutely.
hopefully, I will have to be, I'll have to be more careful about what I say because, anyway, the thing is, we believe that CV should do well. Four wheelers also should do well. Uh, the space where we think there could be challenge is two wheelers, specifically because of disruption. So I strongly believe that adoption of EV in two wheelers is going to be is already higher, but it will be much higher. So the risks are there. We don't know who will be the winner and so on. Some of these companies, actually the larger ones, have actually lagged in that. So at this point in time, we don't know what's going to happen with these two-wheeler companies. So we will kind of stay away from that. But apart from that, what we generally would prefer in something like auto is look at auto ancillaries. There we can uh, we find much better valuations and much better plays. So that's the way we have played the auto sector.
All right. I'll quickly just add in Vinkesh sir as well and get a real pulse of what the auto demand is going through. And obviously, they have come out with a report very recently on the Navratri sales being at record highs. So, Vinkesh sir, you are up as a speaker. Please go ahead and unmute yourself. I was just talking about your report and your idea or your sense of how the festive season has so far panned out. Is it better than expectation, or is it on par with expectation, or less, or below?
So, thanks, Yash, for inviting me to speak. Uh,
A
obviously,
pleasure, sir.
this festive season is really a great improvement as we compare year on year. Because,
Mhm.
as you know, the last 2 years haven't been that great. But
Absolutely.
like you are all talking of the tractor series and all that, so it's panning out different for different category. But we have been very vocal enough, and today also, that the passenger vehicle is one market to look forward to, because this full calendar year or financial year would be the best of the years till date. So overall sentiments are very very positive on the ground. It's a bit mild on two wheeler side, but car side it is very positive. CV is also good. We are seeing good growth there also. Tractors are
Mhm.
normal. So nothing negative in any of the category, but the sense of positivity is up and down in different categories.
Are supply constraints still there, or have inventory levels improved?
So, yes, basically, since April, slowly and steadily, the dealers' inventory level is improving. We had been at
Okay.
a low of 5-10 days. Today, we are at a high of 30-40 days. But obviously, this inventory pile up has happened because of the expected huge bumper sale this Diwali, 5 days. What we see starting from Dhanteras to Bhai Dooj. So,
Mhm.
overall, inventory is good as of today, but still. Uh, Situation on the supply side is not that
Mhm.
great. So it has improved. So I'm not saying it hasn't improved, but it hasn't improved to the level to meet the demand. So that is where the
Okay.
gap is.
So suboptimal, but definitely from the troughs, it has improved.
Yeah, yeah, yeah. So your words, Jagan. Yes, you are right. So so like because we normally talk on what is on ground, what actually is happening, and not what market wants to listen to us.
Awesome. Just one last question, Vinkesh sir, because before I go back to Jiten bhai,
Yeah.
and that is on what sort of waiting periods are we seeing? I know I remember there are a few new launches from these OEMs, and waiting periods as high as 6 months. Has the situation improved on ground? Any top selling models? Any ideas that you could share?
So yes, it's a mixed bag. Waiting periods are still continuing, but we should all consider these waiting periods are because there are a lot of multiple bookings in the system, and
Right.
not multiple to a special brand. It's not brand agnostic. You'll find one customer booking in one brand and another brand. So it's different dealers, different brand, different models, because they want a vehicle, and whichever brand is able to deliver first, they'll buy, and the rest will
And
be
EV?
cancelled. But even I'm saying this, then too, the waiting period, what we are seeing from an average of 6 to 7 months, even if I uh, get all the bookings corrected, still we are sitting on a very good waiting period of around 2 months. So I'm saying
Or,
even if we
and
discount
any
the
trends as far as EVs are concerned?
so EVs, was it's majorly a game of availability and how the customers are accepting it, because Mahindra is going to launch XEV 400 next month, and MG is also talking of it. So hype is created, the demand is there. Tata has improved a bit of Nexon stocks, but obviously I feel it's the current push for the festive season. So the hype is there. But I'm not sure if we are making 20,000 EVs per month, are there that kind of customers or not? Because the gap of supply has been here for a last 1 year, and that is creating a bigger issue, because as a customer want, and if you don't give a vehicle, slowly and steadily his mind diverts from there. So it's a wait and watch thing. but it's a positive thing on the EV side also.
Awesome. Thank you so much, Vinkesh sir, for joining us and sharing your thoughts. Do stay on as a
Yeah,
speaker
yeah.
if you'd like to ask any
I'll
questions to
also
Jitin
want
bhai.
to learn
Uh,
from your spaces, so I'll surely be in there. Okay.
that's very kind of you. Jitin bhai, sorry for that small deviation from the topic. It thoda became about autos. But we are just like that. We are very curious and inquisitive people, and we love
No,
talking about
it's
about.
absolutely very important to get views from industry people, and I think I'm happy that that whatever we got from the ground, we got the similar thing from Vinkesh. That means that whatever we are doing is fine. Yeah.
Jitin bhai, there is a wave of retail investing in India. Millions have already joined in the past 2 years, and millions are in the wing. What would be your, say, top three investment mantras that you would, like to share with the new investors, and any predictions for the next year? Just uh, like I wouldn't hold it against you if Nifty doesn't hit 20,000 by next Diwali, but any predictions that you would like to share?
So again, we are not in the prediction of Nifty at all. I mean, if somebody asks me what will be the Nifty levels and all, that is something which we have always stayed away from, because ours is, bottoms up investing. We look at individual stocks and individual sectors, and we really don't look at the index, to be honest. So, but I can talk about what is what the broader market can do
Yeah.
from my assessment. Obviously, I can be wrong, but I think it will be a challenging market for some time. Uh, but if somebody has a long term view, I think one has to be in equity. I'm a firm believer of that. I think this market will surprise us, but you need to have a slightly medium and long term view, and basically bide out this sort of challenges which we have, most of them external. Uh, so if you can buy that out, if you can be positioned in such a way where you take advantage of sectors which will not be affected, and kind of stay away from sectors which will be affected, I think one can still do well. It's highly probable that the Nifty might not show you the real picture. Uh,
Hmm.
uh, what the broader market is doing. That's possible, and that we have seen this divergence over the last 2 years, in the way in our strategies and in our investing. Uh, uh, again, it does pay to be in the right sectors, pay to be disciplined, pay to be patient, and pays not to overpay.
Awesome, got it. And Jitin bhai, any investment mantras that you would like to share?
Yeah. So I think I always say this, I'll say this again. Investors, see, one very important thing which I have seen a challenge temperamentally with a lot of investors is basically loss aversion. For example, let's say you invested in an IT stock at 40 times, you entered as momentum or something. Uh, you need to realize that you made a mistake. At certain point in time, you need to have basically some strategy in place to cut your losses. But I've seen many investors are so averse to loss. So loss aversion, I think, is a big behavioral issue with many investors I've seen. So I think all good investors, basically uh, do take losses, and because it is impossible for all your ideas to be to work,
To do well.
and
Hmm.
you not making a mistake. You will always make a mistake. uh, so basically, whenever you realize it's a mistake, you should not look at the stock price. You should exit, even if it is at a loss. So loss aversion is a behavioral trait which should be overcome. Second is fear of missing out, what we call as FOMO.
Yes.
I think often seen so many people jump into companies right close to their peak and so on, just because they've been waiting and saying So, for example, let's give some examples in the sense that, let's say a stock was 100 rupees and somebody told you about it or you liked it and you didn't buy it, it goes to 125. You say, "अरे यार, 25 रुपया बढ़ गया अभी तो रुकते." Then it goes to 150 and so कि अरे यार मेरे को 125 में ले लेना चाहिए था तो 150 में अभी वापस 125 आगा तो ले लूंगा and then वो 175 हो जाएगा and then you will get in. So this is what happens with a lot of investors. Or somebody will just get in because somebody it's in a momentum or something, or making a new 52-week high and all that. Again, different styles of investing. As long as you understand what you're doing, it is fine. If you're a momentum investor, then you have your stop losses in place and so on, then you're fine. I mean, but then a lot of investors don't have those risk mechanisms in place. And they would invest because of FOMO. So that, and third is, I think very, very important is, buy at any price. Somehow, during the extreme polarization period, this particular trend gathered a lot of pace and people started buying stocks at any price. And I think last 1.5 years, people are understanding that this is not the right way. Looking at valuations is the third mantra I would give, that, you should always look at valuations and have a risk reward ratio calculated and understood that what is my risk, what is my potential reward in this. Typically, we look at minimum 1:3 risk reward kind of situation, where I think that, okay, this stock can correct 20%, but this stock can go, if things don't turn out well, or if market corrects or something, the valuations are such that it will not correct more than 20%. But if this company keeps on performing the way it is, and market is favorable, it can give me 60% return. So for me, the risk reward ratio is highly favorable. So these are the kind of investments we look at. But when you are investing at any price, your risk reward is not in favor. So that is very, very important to look at. And then, of course, this kachara, penny stocks, a lot of people invest. That is something, a short way to disaster. So the lure of easy money, drags in a lot of people. I think investors should stay away from that. Have a process, where such kind of companies will never come in your portfolio. And that is possible, I think.
So if I've got the order right, it is first not buying into any company because of FOMO. Then if you have bought it and holding at losses, then the fear of loss or loss aversion, something that you need to overcome. And obviously looking at valuations. It might not be the most sexiest thing to discuss. While all your friends are talking about the next hot stock and you are looking at its PE, consider it as perhaps your edge in the market, that you're looking at something like this that not others are, and you may or may not be able to, avoid making bigger mistakes.
So again, all my basically this particular mantra is more for people who have a value band and who look at valuations. Obviously, for people who look at charts or technical or traders or something, of course there will be different rules and different things to apply. Absolutely. But I do understand that even if you're in that space, then have risk mechanism in place. That is very, very crucial. I've seen a lot of people get burned because of not having this mechanism in place.
So do have an exit strategy if you have an entry one, obviously.
Yes.
Awesome. Thank you so much, Jitin bhai. Thank you so much, Vinkesh sir, obviously, for joining us and giving us your thoughts on the auto sector as well. It was great listening to both of you gentlemen. And for all those who perhaps joined us late, do not forget that the Spaces is being recorded and it will be the first pinned post on our Twitter handle. So in case if you're new, do not forget to go ahead and follow us. And while you're at it, do check out our newsletter, which is the Daily Rip India. It hits your inbox every day in the evening. It's a complete wrap of all the market action on that day. It's a short and fun and easy to read newsletter that I write myself. So do check that out. We will be back next week, but not on a Wednesday, on Monday instead, because Wednesday is a market holiday, and obviously we will be having the Muhurat trading session on Monday as well. So do tune in and follow us for more. We have a very special guest lined up for you next week, and look forward to meeting you guys next time. Thank you so much, guys, once again for joining us.